Hello and welcome to dLocal Investment. This analysis is for dLocal on NASDAQ as of 16th of August 2026 with a share price of $14.17. The full report is on dLocal.ca. The shortcut from buy is a technical confirmation cap rather than a valuation call. Momentum had already turned before the print, worded buy on confirmation. The quarter itself was strong on almost every headline measure. Total payment volume nearly doubled, up 92% year-on-year to $17.7 billion. Revenue came in around 8% ahead of consensus, and management raised the full-year guidance twice over in the same release. Volume growth up to 60 to 70% from 50 to 60, and gross profit growth up to 25 to 30%. Existing merchants kept spending more. Net revenue retention was 153% and volume retention 188%. The shares opened up at $15.28 on the back of it. Then the shares closed at $14.17, down 4% on more than 2.5 times average volume. The market read past the headline to the take rate, and so does this report. Gross profit as a share of volume fell to 0.72% from 0.84 last quarter and 1.07 a year ago. That is 3 quarters of decline, and the company's own disclosure names the cause: structural volume-based discounting and Mexican repricing. Pricing power inside the Moat scorecard was cut to 32 on it, business quality fell 6 points to 66, and the competitive read changes from gaining to gaining volume while conceding price. The short horizon cut needs to be described precisely because it is easy to get wrong. It is not a valuation call, valuation held. It is the technical confirmation cap. A short-term buy in this framework requires the technical or catalyst entry path to be open, and neither is. The catalyst group needed a post-print move above plus 5% and got -4. The technical group's momentum condition has been unmet since the 20th of July, 20 consecutive sessions, and already underwater when the last report was written. So the print confirmed the loss of momentum rather than causing it. The conviction ladder is cut from full size to half size, with only the fundamental path open. The bear case here is uncomfortably live, and the arithmetic is what makes it so. Last year's operating profit was $220 million, and the maintained guidance implies $280 to $292 million this year. The first half delivered $116.9 million, growing 15%. That leaves the second half needing 38 to 47% growth from a first half that managed 15. If it fails, guidance is cut on the 11th of November. The take rate slides towards 0.6% as competitors press on price, and the multiple D rates. 1075 is -24%, and this stock traded at 1064 as recently as the 18th of May. Behind all of it sits chronic regulatory risk across the Latin American and Nigerian corridors, which is why the gate state is caution rather than clear. Now weigh the risk against the reward. The bull case is roughly 48% above today, the base case, the most likely, about 23%, and the bear case a fall of about 24%. So you are risking about 24 to make 48. So our call on dLocal on NASDAQ. Hold short-term, buy medium and long. Remember, this is for education, not financial advice. Always do your own research. This analysis is by dLocal Investment at dLocal.ca. The link to the full report is in the notes below. Have a great day.